Crypto used to be full of thousands of more projects than currently operate inside of the crypto sphere today. Celsius, Luna, BlockFi, 3 Arrows Capital, and now FTX have all gotten washed away because they were grossly over-leveraged at best or straight up committing crimes to keep their doors open at worst. Now, what you have to realize is that each time one of these great symbols of trust in the crypto sphere files for bankruptcy because they were too greedy, it makes the whole space look super suspect. This only draws the eyes of regulators who might want to actually ban legitimate projects like Bitcoin and Ethereum, but it does something far more damaging as well. This series is designed to help you thrive in this bear market, but it took me a lot of time and sacrifice to create it for you. I should probably have it behind some type of paywall, but I genuinely believe that the more people that know about this, the better, and that is why I chose to drop it on YouTube. So if you like content like this, make sure that you smash that like button, make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Now, let's go figure out how we can hedge our portfolios and keep a hold of the wealth that we have generated. Now, each time a giant in crypto falls, the event scares off thousands of crypto enthusiasts. These are people like you and me who have spent countless hours studying blockchain technology and meticulously investing in assets that they thought were safe. And within a single year, crypto is close to being fully delegitimized to all of its users. This is far worse in effect to the maturity of crypto in the market than any regulation. Now, in crypto, we know to expect high volatility and we can even expect to lose some money from time to time. It is a cutting edge industry after all. High risk, high reward. But when users get a notification that their accounts have been frozen and they can't access funds for months and months with no light at the end of the tunnel, it causes people to just shut down on crypto altogether. Millions of people have sold their crypto and taken their fiat away from the market and off of exchanges. That is the story that is told by the price chart of every single crypto in 2022. Remember when the total market cap of crypto was like 2.9 trillion? And that's trillion with a T. Tango. 2.9 trillion is more than the valuation of Google, Amazon, and Facebook all combined. Yeah, crypto's not even worth 1 trillion now. At the time of recording, crypto is only valued at $870 billion, which is less than one company on that list, Amazon. This dramatic reduction in crypto's value reflects the reality that people have lost hope and lost interest in crypto. And they have moved on and taken what is left of their funds with them. And not by a marginal amount. Crypto has lost 70% of its value since its market cap high of 2.9 trillion. So what's the point? The point is that people like you and me have left crypto and likely won't come back until well into the next bull market, if that ever even comes. But there's not a lot of young bucks just looking to get rich quick now. Those guys got burned in March when the Fed started their rate hikes after the big DeFi explosion of Q4 in 2021. And trust and believe, they all got wrecked and none of them have come back. The people that remain in the crypto sphere right now are guys like me who have started businesses and relationships inside of the industry. People that have survived a couple of different bear markets before this. It's people that have entered crypto communities and found other enthusiasts that share interests beyond just crypto. But for those who remain in crypto, also includes large greedy institutions who are sucking up crypto by the millions at prices not seen in the past few years. These big institutions are not your friends, by the way. Even though headlines that report on large institutional purchases of crypto are widely celebrated, they probably shouldn't be. Crypto is for the people, and now its very decentralized nature is being altered as a result of large institutional accumulation. Satoshi Nakamoto set up the Bitcoin proof of work mining system as a way of fairly distributing Bitcoins to literally anyone who could get their hands on a GPU and an internet connection. Obviously, a little bit of power needs to be thrown in there as well. Now that the leaders of the global financial system recognize that Bitcoin is extremely valuable, they want in. But now that they know what they want to do, the game has changed. But they were never going to pay the same prices that you did. They want to buy Bitcoin at a massive discount. An 80 to 90% discount is what they're looking for. Now, crypto is not there yet, but by the end of the bear market, it definitely could be. Now, let's not get it twisted. I'm not saying that the world's banks got together and conspired to tank Bitcoin and Ethereum prices, but I'm not saying that they didn't. That would be kind of foolish to believe. Now, they definitely have manipulated the price lower at every chance that they can get, but they have not been responsible for the more than 70% shed on crypto's market cap. That has a lot to do with the Fed's rate hikes and the bad actors like FTX and Celsius who have eroded retail buyers' confidence in crypto. But the banks have definitely greedily stood by and DCA'd, except that they have access to way more data and ultra powerful predictive AI. The goals that the big banks have for being involved in crypto are not the goals that we have. While you see Bitcoin as the currency of the future that is going to revolutionize trade and replace inflationary fiat currencies, the big banks see things very differently. I'm not going to pretend to know exactly what the executives of banks are planning for crypto, but I know that they like any other technology that they see that is a means to an end. And the end of any big bank is to control every aspect of the environment that they are invested in to maximize profits. Being able to control the variable of money is not something that banks have ever been able to do before. Bitcoin allows them to do that, but when they realized it, it was too late. Now they have to wait, or perhaps induce a prolonged bear market so that they can buy Bitcoin and other cryptocurrencies at much lower prices. Fire sale style. It is in this way that they will then be able to take control of Bitcoin's robust supply distribution mechanisms for purposes that I can only assume are not going to benefit you or me. So what does this mean for us? Well, it means that the game has absolutely drastically changed. The psychology of the market going forward will increasingly be dominated by institutions and their interests. And we're actually seeing this with a lot of the cryptos that are coming out now because they are building to institutional and enterprise grade solutions right off of the bat. Sophisticated traders will be able to form new models to understand how the new game of crypto trading and investing works, and some of them will be profitable. But rest assured, the new game is not going to favor the average crypto user like you or I, or the crypto influencer and business owner like myself. It may be, in fact, time to step away from the Bitcoin buy button and look for greener pastures. That is until the new crypto market is understood better by the leaders who actually care about the retail investors involved in it. In the next 2 episodes of this series, we are going to mix in the macro trends of all of the older markets to try to gain a more holistic perspective on what this bear market could entail. Now, let me know what your crypto bear market strategies are in the comments section. And if you like content like this, make sure you smash that like button, make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Thank you so much for showing up to this video. I will see you in the next one. Have a good day, everyone.